Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be talking about AMC. They just had a huge increase in their stock price today, so I want to talk about that. Last time I talked about AMC, I'll show right here, I had a huge number of dislikes. People hate what I have to say about AMC, but I'm going to keep talking about it. Please consider subscribing if you haven't already. Also like the video if you find it helpful. Now grab some popcorn, your beverage of choice, mute your cell phones, and enjoy the show. All right, so AMC ended the day at $19.56. They started the day at $17.79. Actually, their previous close was at $16.47. So huge increase there. They rose by $3.09 for the day, a total of 18.76%. If we look at them on a 5-year time frame, actually, let me reduce that. So back in January, end of January this year, they jumped all the way up to $19. I actually ended up selling most of my shares around, I think around $4.50. I bought in around $3 and I was like, hey, that's a nice gain for me. And I was happy with that. Also, I thought they were overvalued, and I'll talk a little bit more about that later. But if we look at their stock price, it hit $19 about 4 months ago now. And it briefly hit it and then dropped down. Now it traded down in the $5, bumped back up to $13, went back into the $9, and now it's back at $19. So I'm guessing it's going to drop again tomorrow, but we'll see what happens. This is just crazy. Right now, what's happening with AMC, their current market cap is sitting at, let's see, $8.8 billion. And we'll go over the fundamentals here in a minute. But leading up into what is causing this, if we look at the short ratio over the last couple months, you can see that starting in January, the end of January, you started to see a huge increase. This is really when it hit $19 a share. You started to see inflows into a large short positions into the stock. And then it continues and continues. So from the January 15th, that looks like, let's see, 12 times as many short positions as there was back in the middle of January. If we look at short volume right now, $121 billion in shorts, and then the short cover ratio is 1 day. Shares outstanding is 450 million. And then if we look at current short volume, it's at 94 million. So what is that? 20 something percent. 21% here. So pretty crazy. Today's trading volume is at 12 million shares, which seems low considering the average is 134. So that's quite odd. Interesting there, but one of the main reasons why I'm going over this is that the main thing here is that people are trying to get into AMC, and it's just kind of like this short squeeze that's happening right now on the stock. There's a large short volume. People continue to put short positions in, doubling down on what they had in the stock before. This is very reminiscent of what has happened and is continuing to happen with GameStop. If you like this video, please hit that thumbs up button. Let me know down in the comments what you think about AMC. I love hearing the feedback. I'll definitely respond back to your comment as long as it's courteous. If it's rude, I won't respond to it. But if you have a good case, please just drop it down in the comments. I'll respond to it. Thanks so much for watching. Back to the content. All right, so the question is, why are people flooding in short on AMC? To answer that, we really got to look at the fundamentals. Before we do that, I really just got to say, if you think I work for Citadel, great. If you think I work for Melvin Capital, all better for you. That's laughable. So I appreciate the comments in the last video. So I'll put those here. It's just hilarious. Keep your diamond hands. Paper hands, they can stay out of this chat for sure. I know everybody watching has diamond hands. They're not going to sell AMC. So let's just get into the fundamentals. I know you're not going to sell, make any decisions based off of this. So let's go in here and look at their revenues over the last year. So What I've been doing with most of my companies I've done analysis on is I kind of ignore the 2020 numbers just for the sake of the argument, to make the company look better going forward than it is actually performing right now. Because I do believe that everything right now is, for most industries, is short-term impacts to their business, and they will recover in the long term. So, and I think nothing has really significantly changed with AMC's business as well. I know there has been some change with HBO Max bringing all their releases for the remainder of 2021 to HBO Max, but they are also releasing them in movie theaters simultaneously. So that is a little bit of a hybrid model, but I don't think that's going to increase. I think when we saw what was it, Godzilla versus Kong, they actually saw really good watch time in both. So I don't think there's I don't think they necessarily cancel each other out, and the numbers so far have proven that to be correct. So let's look at the financials. So revenue over the course of the last 6 years, you saw this huge increase in revenue between 2016 and 2017. Just want to throw that out there, that this was an acquisition. So they bought Odeon Cinemas and Carmike Cinemas. So that's where they got that huge increase of revenue of $1.4 billion for that year. And you saw that here in their revenues on the total line. So if you looked at this just right off the bat, you could say, look at AMC, they're a growth company. They're, they almost shoot 56%. Man, they deserve a high multiple. No, that's not the case. They had an acquisition. This isn't organic growth. So they cannot be defined as a growth company here, okay? So just wanted to set that record straight. If we look at their EBITDA, it had been slowly going up, but it really just, even with $1.4 million, they only increased their EBITDA by about $2 million here. They increased it the following year, and then they had a slight decrease in EBITDA the next year. Next up, I want to look at their cash flow, really to look at free cash flow here. So if we look at cash from operations minus their capital expenditures, if we look at 2019, 579, so they had $49 million in CapEx, $49 million in CapEx. So let's just do a multiple here. So let's say they had, let's just say they're an $8 billion market cap. And so this is $8 billion market cap, and divide that by $49 million. They're trading at 163 times free cash flow of the 2019 numbers. So their free cash flow in 2019 was 49 million, and they're trading at 8 billion. So their multiple is 163 times free cash flow. Absolutely bonkers. Not in this world a good number to be chasing after. So next up, let's look at the balance sheet. In the 2020, one good thing I saw was that they did not rack up that much extra debt. So let's look at the liabilities, or actually cash and short-term cash equivalents. Let's see. So I'm not on the right thing, am I? There we go. Okay. So for 2020, end of 2020, they had 308 in short-term cash investments. Scroll down to current liabilities, 1.5. So again, huge difference here. $308 million in cash, and they have, let's see, short-term current liabilities of 1.5. So they have $1.2 billion that they have to cover in the next year and come up with in either cash flow that they either cash flow from revenue from their operations, or they need to do this through financing or issuing new shares. So they have quite a bit of cash that they need to come up with in order to cover those short-term liabilities. Long-term liabilities didn't increase all that much over the last year in relation to their total debt size. So I actually think that's a plus. Good for them. They were able to do it in other ways, but how did they do it? How did a company like AMC get all the cash that they needed over the last year? Well, if we go to their shares outstanding, you can see that there was this ginormous, huge increase in shares outstanding. So In March 31st of 2020, they had $104 million shares outstanding. Okay. By December, or actually March 31st of this year, they had $450 million shares outstanding. So let's just do the math, just real quick. Do 450 million shares outstanding over, what was the original? 104 million. And we got 4.3 times, basically it's 4 times higher. The number of shares outstanding is 4 times higher. So it's 432% higher than it was before. Now or 332%, 332. So it's super high. So essentially they've been diluted by that much. So if we take that dilution and just say that they're worth exactly what they were back before the pandemic started. So let's go out to our 5 years. We'll go to roughly February of 2020 before the pandemic hit. Considerably, that's what their value was before the pandemic. $7.46. Okay. Roughly, they're worth a third of that. Okay, just based off of what we just calculated with their shares outstanding. Okay, because they've diluted themselves 3 times over. All right. So if we got that 746 divided by 3, you got yourself $2.48. $2.49. Okay, cool. That's what I calculated just right off the bat what they actually should be worth right now, and they're trading at $19.56. That's absolutely bonkers. Okay, like they should not be trading near $19.56, just based off of that. And all of that's based off of, again, if the revenues were exactly the same as February of 2020, which was before pandemic, and they issued all the shares and nothing else in their business changed. Okay, we all know that to be true. Okay, nothing else or untrue. Things have changed. They've added a little bit more debt. They've issued 3 times the number of shares they had before. There's a massive dilution in AMC's name. Okay, so even if we took them at their high, okay, high in January of 2017, we can even go max here. I'll even go max. Let's go all the way back to 2015, $35 a share. Even if we put that in a third, you're putting yourself at what, $11 a share? I'm not saying that's the fair value. That's not the fair value. So even $11 a share, a third, the dilution would warrant that. So it's massively overvalued. Be very careful here. Last thing I wanted to share is analyst price targets on this historically. So currently the highest price target on this on the Wall Street is $16 a share. Blew past that today. Was trading higher than that yesterday. Blew past it today. You'll probably see a little bump in the name. Low side $1, average $5, or what is the median is $3.70, and the average is $5.11. And the target difference is 68%. So yeah, 73.89% return potential based off of the median price target. Now, if we look at the historical graph here, you can see that right around, what date is this? January 4th, it was trading at $2. The price went up to 19. You can see that analyst estimate went up a little bit slightly to about $5 it's at right now, but it's just dramatically higher. The share price is dramatically higher than the average. That low has just remained consistent on the stock. And a lot of this has to do with when the dilution occurred, okay? When the shares outstanding happened. And I don't see these analysts changing their estimates, especially on this low side. Whoever's analyzing this and getting $13 a share, I'd love to see the numbers on that. Or if anybody wants to share that, please just put it in the comments. I will look over anything that you provide me and have a conversation about it. But yeah, in my last video, I think I came across the number of, I think I came up with fair value right around $2.49, somewhere around there. So if it does get back to that price, that would be somewhere where I'd be, it would get my attention and I would start trading at that level. But at its current price point, I can't get behind it. Especially me and my Citadel and Marvin Capital brethren, we can't definitely get on that. Definitely go short on this one. Get paper hands. Diamond hands are overrated for everybody out there. Hope you know I'm just being facetious here, but seriously, AMC is massively overvalued. I know that's not what stock people owning the stock right now want to hear. But I really have to be true to the people who are actually paying attention to what I'm saying and the reason behind why I'm saying it. All right, so one word of advice: if you are going short on this position, be very, very careful. We've seen it time and time again in the last year that names like GME and AMC are attracting a lot of names, or a lot of volume into the name, and it's leaving a lot of short sellers dry. So the last thing I would want is an individual trader to go out there, enter into this name, think it's going to the moon, which it very may will, but I don't believe it should be. Okay, that's my opinion. That's what the numbers support. I don't have anything other, basically to the contrary to prove otherwise. So if you are in this position and you're in a long position on it, you make sure you set a price target on when you plan to sell. I know people joke about diamond hands, but for real, if a stock gets to your price target, that indicates that it's time to sell. The price target's 12 months out. If it hits that before 12 months, you probably should sell. It'll have a retracement. You can buy it again and then resell it. I mean, I don't suggest that for AMC, but with a normal stock, that's how I would approach the trade. Thanks so much for watching today's video. Please subscribe. It helps me out a lot. Also hit that thumbs up button. Love you all. Frank Finance, out.